8 rounds of talks. Finally, we have a deal. Does that surprise you, or had you been expecting this to drag on even further?
We thought Japan was going to be one of the first in line, and you had the local election that I think caused the delay. And Besson was on TV this morning saying he thought the deal could come very quickly. Clearly, we've been close to something, and they finally took some action and moved it forward. I think what you see in the reaction to those big car companies, from Toyota, Honda, all down the line, 10 to 12% move says that market got very pessimistic on how things were progressing, overly pessimistic. I think that's going to be a key theme of some of the earnings reports were coming, is they started pricing in the worst case scenario, and things are coming in slightly better than people feared. And so you're getting a big rally at some of these key levels here for Japan and for the broader markets.
Yeah, we're up about 800 points on the Nikkei, about 2% ahead. So this is a very big surge. I'm wondering whether or not the market investors are getting a little bit ahead of themselves, right? Because the reciprocal number that we know that we have to work with now finally is 15% for Japanese goods coming into the U.S. We have not gotten yet, though, to the reciprocal tariffs, right, on pharma as well as on chips. And Japan happens to make a decent amount of both of those products.
I mean, what's interesting is GM was down 8% today in the U.S. on some of the tariff impacts, and now you have Japan reacting positively. I mean, I think there's a number of cases where Toyota can manufacture and assemble their cars in the U.S. at a greater rate or at an equal rate as GM. So it's kind of interesting, just again, how the market started pricing in the worst fears, and you're getting to something that's slightly better. And Japan does make big investments into the U.S. manufacturing, and they're a good ally. You've heard of this $550 billion number. It'll be very interesting to see the details. You had Masa's son come over with SoftBank, and that deal of how they're going to partner with Oracle and OpenAI to bring more AI spending into the U.S. There's a lot of places where Japan can be a very good partner, particularly in Asia. You see Trump is using these deals more so than just the trade and tariffs, but also strategic spending, and Asia is a key place. I think Japan's going to be one of maybe the best deal. India is trying to compete to get one of the best, most favored economic clauses, but Japan's a key ally in Asia, and I think you're seeing some of the best terms from any of the major countries out of Japan.
Yeah, it was good to finally have gotten this deal done. I would agree. Ishibas Shigeru, now that the deal has been announced, right? He doesn't have that reason to stay on anymore. Are you expecting him to step down with almost immediate effect? We're listening out for a press conference by him. Should be soon. And what happens after that?
I think one of the key stories has been that consumption tax and the inflation that Japan is facing, and what can the Bank of Japan do to offset some of this. I think this is one of those win-win scenarios where I was perplexed why, I know rice can be one of these very political issues, and if you have rice soaring as much as rice was soaring and causing some of the inflation, allow some rice imports to offset some of that price hike you're getting. That sort of seemed like a straightforward solution, although very, because politically controversial. I think that's a win-win scenario for Japan and offset some of their inflation pressures. I think this consumption tax question, when Japan has some of the lowest rates around the world, they could borrow at very, very low rates. You can say the rates are moving up a bit, but still 1.5% on the 10-year. Our 10-year in the U.S. is 4.5%. It's a dynamic where, perhaps the consumption tax rate hike wasn't the best idea. And so you try to have the BOJ put on the gas and the fiscal taking the foot off the gas, putting the brakes on. I think the people were voting against that, and we'll see if that policy gets reversed in the short term.
What qualifies as a quality deal? How do you express that in portfolios, investments? Because if it's a favorable deal for the U.S., for example, depending on how you see a trade deal with whichever country, does that necessarily mean a good reason to pick up U.S. assets? Is that how you define a quality deal for who?
Well, I think we've gone from this free trade to friend trade. So you're gone from, you've got to you see that Trump is going towards people he considers key strategic allies. And I think there's going to be spending on both sides. I think it's going to be positive for again, more positive than feared is the issue. It's like you see these big moves in the Japan car companies because they were worried about how negative it could be. And so it's getting more positive. I do think there's places where the U.S. can help Japan and Japan's going to help the U.S. The spending on defense in Asia is going to be a key theme. And, I think we could help each other. And so I think that's, one of the things Trump was looking for was for Europe to spend a lot more on their defense. And, I think in terms of being an ally in Asia, I think the U.S. is a good ally. And, I think that we're coming to a good deal.
And apart from the trade situation, the tariff negotiation, what happens now to some of these Japanese assets? I mean, the domestic situation, and the election wasn't really about the tariff negotiations with the U.S. anyways. It was really about inflation story. It's about consumption tax. Potentially, with this election results, there could be some pressure around that. Can that move the needle or change the direction in any way? Or are you just sticking to this wide view of negative bonds, negative yen at the moment?
Well, I do think the investment appetite, I mean, in terms of for the equity investors, you have rates still very, very low. If you have inflation, how do you protect yourself from inflation? You don't want to just have your money sitting in cash earning nothing. You got to do things to protect from inflation. We've done a lot of work at WisdomTree. As stocks are sort of the best long-term hedge against inflation, companies raise prices with their cost inputs over time. And the Japanese markets are cheap. When we look at the broad markets, we have a basket of Japan, our flagship DXJ. The prices are 12 PE. You get a 3% dividend, 2% buyback. You have record buybacks coming out of Japan. That is an attractive place for the Japan people to sort of hedge their own inflation costs, to buy the equity markets, put their cash to work. And, and I think for global investors, Japan has been an unloved place. You see U.S. markets 10 PE points higher than Japan, and it's been unloved and uncrowded. So I think there's a lot of reasons to look favorably beyond the Japan equities.
Yeah, and you can't forget though, Jeremy, that you've got ROEs up in Japan. We're up into the shallow teens, which is not a bad thing, right? And it should be pretty appealing to push back. But I want to get your take on what's going on in the bond market. I mean, stocks are on fire today, 800 points, 2% ahead. But let's take a look at what's going on with bonds. Even their benchmark, the 10, we're knocking back on 159, which would be the highest we've seen there in, I think, about, 17 years since 2008, right? So that's kind of worrying. Even more worrying is how steep it's getting, right? The long end. 30-year paper, super long 40-year paper. We're looking at record levels right there. This is probably pricing in. Okay, so Ishibas going. It's going to be somebody else. Maybe it's Sanai, Takeuchi, maybe somebody else. We don't know yet. But whoever it is, they're going to have to work with the opposition. And the opposition, these are the guys, right, that want cuts in the consumption tax, which isn't going to be good for the government's fiscal position, is it?
Well, I'd say in some ways it's more healthy than the U.S. yield curve scenario. So I've got a yield curve in the U.S. of 438 on the Fed funds and basically the same rate on the 10-year. You want an upward sloping yield curve. That's the sign of a healthy economy that's growing. You can say now Japan is starting to price in inflation. This difference between the 10 and 30-year yield is a view on inflation and growth in some ways. And that's a healthy sign. That's a more normal functioning economy than a flat or inverted yield curve. If you have no growth, no inflation. So I think in some ways it's more healthy than the U.S. yield curve. And I want the Fed to be cutting rates so that we get 100 basis points term premium, more like what Japan has.